Hey, how's it going? It is 1 minute after the closing bell on Friday, May 24th. Normally, we don't do the post-market analysis on Fridays because we normally have a weekly market review, but I've been sick and I've been missing a few of the sessions this past week, and it is a holiday weekend. So normally we don't do weekly market reviews on holiday weekends, so I figured I would just do the session today. Anyways, um, excuse me, I'm still sick. If I cough or clear my throat, I apologize for that in advance. And of course, you guys weren't expecting me to do this session, so I'm here by myself. It's basically a recording. So let's take a look and see how this market is behaving. Today, we had a little bounce off of that huge, not relatively huge, movement downwards yesterday. So we can see that all week we were very muted, very quiet, and chopping sideways. And then yesterday we got a comparatively large bar to the downside. But if we look at it in context from a few weeks ago, it's really not that big. It's just in the last 2 weeks, our range collapsed, our ATR went down, and our volatility shrunk. So it just felt like a large move. All it did really was we chopped sideways, and then yesterday we came down below the EMA 8, and today we popped right back above it, right into the same range. You can see that today's close is pretty much the same as 3 days ago's open, which is pretty close to 2 days ago's close, which is also pretty close to 5 days ago's close, and pretty close to the middle of the range of Thursday, May 16th. So really, this is still chopping sideways. This is what I was talking about all week, where we weren't really expecting the market to go anywhere. We might get some volatility because of the FOMC minutes and the NVIDIA, which is what we got. But we really didn't expect the market to move in any direction and really just to chop. And we've gotten that. We've got the holiday weekend. We can see that today's volume is super low. Yesterday, we got some volume back because of the FOMC minutes and NVIDIA. But really, we've been really low volume all week long. And we do have potential to see that volume come back on Tuesday. Once that volume comes back, then we might get some directional movement. Which direction? Well, right now, I'm leaning bearish, as I've told you guys. Higher conviction now than before. Earlier in this week, we said, oh, it's hard to say. Just a little bit, maybe 55, 60% bearish because there's so many factors that were going on in this week. Mainly the low volume could cause gaps in the markets from news like the FOMC minutes or the NVIDIA earnings. But normally we would expect it to be down. Now that those volatility inducing events are behind us, then we have a little bit higher conviction. But again, we don't have volume yet. So our conviction isn't as strong as it might normally be. That automatically gives us stronger conviction to the downside. But there's so many signs that I'm seeing now that we're probably a topping behavior for now. Again, this doesn't mean that we're changing trend, that we're going to a bear market. It doesn't mean that we're coming way back down to 500. All it means is that we've consolidated and we paused right here. And when we break that pause, if we break it now, or if we break it soon, then it is more likely to be broken to the downside. If it takes forever to break, then it's a different story. But if it's going to happen in the next week or so, then down is more likely than up. Down to where? Maybe down to this EMA 20, maybe down to this horizontal support. But that actually wouldn't be much downward movement, but maybe down to the EMA 20, maybe down to the MA 50. If it's really weak, then we might come back and revisit this horizontal line. But for now, that's not what we would expect. So for now, all we're saying is there's a higher potential if we break this sideways movement in the next week that we are going to break to the downside, maybe go to the EMA 20 or the MA 50. Once we get to the EMA 50, EMA 20, then we would reevaluate and say, is there more to go? or do we think we're going to turn around? But for now, again, we're not necessarily going to break this next week, but if we do break, the likelihood is more to the downside than to upside. Why do I say that? Well, let's take a look. We had an all-time high yesterday in terms of the high, not in terms of the close, but in terms of the high, that was an all-time high. Even if this wasn't the all-time high in terms of the close, right around in this area, one of these is the all-time high. Let's find out. Okay. Well, that was the all-time high. Well, I guess I didn't program this to show me the all-time high in terms of the close. Let's go, maybe if I do line, all-time high. Oh, okay, so the close was right there. Tuesday, May 21st, closing at 531.36. So we're very, very close to all-time highs. Yesterday, we hit all-time highs. Let's take a look at how many stocks were actually making 90-day highs. Not even all-time highs, just 90-day highs. And that was yesterday. Yesterday, we had 55. 55 out of 500. Only 10% of the stocks in the S&P 500 made 90-day highs. That means this index was carried upwards to an all-time high on very, very, very few stocks, specifically on NVIDIA. NVIDIA carried it, and then some associated stocks that were affected by NVIDIA, like Taiwan Semiconductor and Dell, the SMH, the semiconductor sector, and then a few other things like Chinese and other things that also had earnings that did very well. They carried the S&P 500 to the all-time high. It means that not that many stocks are propping it up at this point. So it's not very confidence-inducing that a very tiny percentage of all the stocks actually held this up to the all-time high. Let's take a look at what else. Well, what about sectors? If I don't have a whole bunch of stocks carrying this, then how many sectors do I have carrying us at the all-time highs? So let's take a look at our sectors. And so we have SMH, not surprising given NVIDIA, but home builders did not participate in that all-time high. Silver, a couple days before, did participate, but that is actually the opposite of what we would want to see, because silver would be a flight to safety. Technology did, not surprising because of NVIDIA, QQQ, XLC, not an all-time high, but it is topping right here. It did show at highs. All-time high was way back here, but we're at similar levels. But look at financials. Look at industrials. Look at retail. Look at defense. Look at small caps. Look at gold. Look at basic materials. Look at the Dow Jones. Look at utilities. None of these other sectors, healthcare, staples, discretionary, real estate, energies, nothing else participated in the all-time highs. The all-time highs was specifically in the tech sector, and more specifically, it was in the semiconductors. So in our XLK, we did go up a little bit higher, but communications was not. So this is very tech specific, carrying us up to all-time highs. That means we don't have broad-based participation. In fact, most of these sectors, we saw that they couldn't even make it to a recent all-time high. You see this peak right here was below this peak. We've got this peak right here below this peak. We've got this peak right here below these peaks. This peak right here below these peaks. This one below these peaks. And even on the ones that made recent peaks like the staples, Well, it didn't happen. It happened a couple of weeks ago, not recently. So we are definitely on a downward slope right here. And the ones that made highs, you can see like XLU, this low is lower than this region right here, where we have support or consolidation. We broke through support right here. This low is below this support, this low right here. So we have a lower low right now. Obviously, a lower on these ones, but the ones where they did peak in the last couple of weeks, then so where it's not this pattern where this consolidation level is below the highs right here, like this one made it above the previous highs, but this low is below or is actually at support right now. So financials haven't broken that support quite yet, but we're on our way there. So everything about this shows me that we have only one sector holding the entire market up. And then we have all these other sectors that are flattening out and weakening. XLC flattening out. This one, financials pulling back, weakening, hitting support, potentially breaking through support. Same with industrials, hitting support, potentially breaking through it. We've got retail that just peaked its head up and then just got smacked way, way down, broke support right here, is entering a horizontal support. We've got our basic materials pulling back to support. We've got utilities breaking down and not quite, we did break this support, not quite at the next support yet. This one, healthcare, filling the gap right here. So staples, same thing. So all of these sectors looking like they've really peaked out. We are starting to get a lower high and some like XLE, a lower low. So we're now looking like we're switching down into a downtrend. So sectors are not helping prop this up. So we're at all-time highs. We've only got a small handful of stocks holding up the entire index, and we only have one sector that's holding it all up. If we take a look at our momentum, we have all-time highs. How many of these sectors have more than 50% of their stocks above their 50-day moving average? The S&P 500 is well above its 50 moving average. But how many stocks, where did it go? Where was it? Are actually above their 50-day moving average? Well, in the S&P 500, less than 50%. That means there's a few stocks, there's about 51% of stocks that are above their 50-day moving average, which are holding the whole index way above the 50-day moving average. So we're seeing very concentrated strength and we're seeing weakness everywhere else. This is another way of gauging the strength inside the market. We've seen a similar story by looking at sectors and by looking at the S&P 500 all-time high or 90-day highs. Now momentum is telling us a very similar story. Very few stocks in very few sectors are actually carrying the S&P 500 not at all-time highs, but above the MA50. And the fact that it is significantly above the MA50, that is troubling because now it looks like that we have very few things supporting the fact that we should even be above the MA50. So if we were equally weighted, then we would be right here, just above the MA50. We wouldn't be way up above the MA50. So that is another troubling sign. The fact that the S&P 500 was not able to move up or sustain its upward movement after NVIDIA earnings, which were quite good, and you keep hearing in the news that they're blowout, and there's no reduction in demand and all of this stuff, but the S&P 500 traded off. There's profit taking on that news, not reinvestment on that news. And of course, the NVIDIA didn't even move beyond the the market makers' expectations. So the expectations of the market makers, hey, they said within 80 points. And here we got, we got that 80 points. So they matched the expectations. They didn't exceed expectations. So the lack of strength in the market after NVIDIA earnings, that is not a good sign. We've got VIX pulling down to these lowest we've seen in many years. I think all the way over here to 2019, 2020. And then, so we see VIX starting to move upwards. We reverted back today, but we're starting to see volatility creep back into this market, which means that we're starting to get potential for directional movement. And normally when VIX moves upwards, or if we get a sustained move upwards, that would be associated with a downward movement inside of the markets. Okay. Another sign is that, look at this movement upwards into the all-time high right here. It is associated with downward movement in volume. So there's not widespread participation in terms of market participants in this move upwards. There wasn't widespread participation in terms of stocks. There wasn't wide participation in terms of sectors. So this move is more like a movement on fumes, not a movement on full tank of rocket fuel. It's just the fumes that are left over that got us here. It's like the afterburner. The afterburner got us to these highs right here, and now we're running out of fuel for the afterburner. So unless fuel comes back into the market and we refill that tank, it's going to have a lot of trouble continuing to move upwards. And in fact, it should drift downwards. Drifting downwards gives us the opportunity to refill the tank. But once volume comes in, either we're going to surge down towards somewhere where markets or participants can re-engage, or we're going to move upwards. And right now, everything that we've seen so far is pointing towards a downward movement. We look at TLT. TLT just is not getting the memo. We got finally a downward movement yesterday, but now we have a rebound. After the FOMC minutes, after so many Fed speakers repeatedly over and over, the CEO of Goldman, the CEO of Morgan saying that, or Citi saying that, hey, look, we're not going to get rate cuts. Well, this bond market isn't having any of it. And based on, we've been through this in several videos, so I'm not going to spend too much time on it, but based on the probabilities and the upcoming dates of the FOMC meetings, this price should be way down here. And at some point, those two things have to resolve themselves. Either the price has to come down here, or the possibility of rate cuts needs to come back onto the table within the next July 31st, which doesn't seem too probable. So the more likely event is that these TLT or the bond values come back down towards the bottom of this channel right here. If that happens, then that is a increase in yield that's going to make QQQ struggle, which is going to make SPY struggle. It's going to make utilities struggle, which was one of the strongest sectors that we saw earlier. Straight up. So all of those are going to struggle, and then that would be associated with a downturn in the S&P 500. And I shouldn't say downturn. I should say a pullback, at the very least a pullback in the S&P 500. All right. Other signs that we're seeing that this is weakening, there's a lot of consumer behaviors, consumer sentiment, retail sales, those are all down. That points to a weakening economy. And then we see things, staples, like bellwether stocks, like McDonald's, breaking down. We've got Home Depot breaking down. These are bellwether stocks that indicate the health of the consumer and the health of the economy. And those are breaking down. So that would be a longer term indicator, not necessarily short term, But so that's telling us, now we're looking at a short-term to medium-term pullback inside the markets. It's just not looking that great. And so everything that we're seeing so far is showing us that this market is not healthy. It is going to have a lot of struggle continuing to move upwards, and it does need another pullback before it starts to look healthy again and maybe starts to move upwards. So far, that doesn't mean a break of trend or that we're going to move downwards. It doesn't mean a massive pullback yet. But once we get down to that MA50 or down to this horizontal line, then we will reevaluate and see whether or not it could continue and develop into something unhealthier. But for now, we're just saying that there's a very high possibility of pulling back after this consolidation rather than moving upwards, assuming that we break this consolidation sometime in the next week. The likelihood of us breaking this consolidation sometime in the next week is reasonably high because we've been so low volume for a while, and all of the events that caused us pause and caused us fewer participants in the markets, those are largely relieved next week, except for the fact that we have Monday off and it's a fragmented week, so we'll have less volume on the week automatically. So maybe it does happen the week after in the first week of June, but for now we're going to keep our eye on volume and the direction of the S&P 500 for the next week to see if we get that break. And if not, then we have a very much higher potential the following week. So be careful, stay neutral or slightly bearish. Don't make big bets to the upside right now, because if NVIDIA couldn't carry this market upwards, then nothing will really. And NVIDIA, it did continue to get some bids today, but what you'll want to see is that to continue and to last. And you can see we closed right at the high of yesterday. So the high yesterday was 1,063.20. Today is 1,064.75. We closed at 1,064.69. So we're a little bit higher than yesterday's high. What we want to see is that to continue before we can believe that NVIDIA can actually has momentum to the upside. So we're going to end it here. I just wanted to share with you why we're starting to go a little bit more bearish, lean bearish inside of our portfolios, because that is a change because we were neutral for at least a few weeks. So we're going to start leaning bearish. And then when we see a move downwards, an actual break of these levels, then we'll be more bearish until we get a reasonable pullback, and then we'll reevaluate.